Hello everyone and welcome to this week's weekly market view for Monday the 11th of July to Friday the 15th of July 2022. My name is Vishal and I'm going to be analyzing some key charts and some key levels for next week. So let's get started. Alright, so let's start with the Nifty chart and let's begin our analysis from the monthly chart of the Nifty. So as we have been seeing in the past week, the monthly demand zone is holding. The first demand zone did get violated, but seems like the second demand zone is holding, and prices are slightly consolidating. So we are maintaining a slightly consolidated to bullish view on the monthly chart. On the weekly chart also, the prices are bouncing out of this weekly demand, and right now we are in a slightly crucial area right now. If you look at the daily chart, and if you look at the daily chart here, we have this area just above this base drop, and we have this gap area here. The better level of supply is still further up, but this is going to be a key level. The market could possibly act as a trap over here, and this is the most important level on the Nifty. So 16,927, 17,135, and we are currently trading right now within this level. If you look at the volatility gauge, option premiums are fairly priced right now. So if you are expecting the markets to be playing a little bit more non-directional, then you can plan some credit strategies in this zone here. Let's go out there and let's look at our intraday chart. And if we go on the intraday chart, let's go to a 60-minute chart first. And just before these key levels of 16,527 on the higher time frames, we have this one key level that is currently playing out right now, and today in fact the markets gapped up straight into that level, and currently the level is holding. Now depending on the global markets, right now the global markets have come out with the non-farm payroll news, and the bond markets have fallen down. That should give the equity markets a little bit of a relief, but now as we speak, the equity markets are also beginning to show some negativeness, and that might get incorporated on Monday morning. So since prices have now closed into the 16,250 to 16,326 supply zone, there is a possibility that if this supply zone plays out, we might have a gap down opening on Monday. Obviously this is completely dependent on what SGX Nifty is currently trading at, and if I look at the SGX Nifty right now, it is 56 points negative. So definitely the global cues are weighing on the Nifty. Now if we look at the demand zone, there is no clear level of demand, but we do see a level of demand over here first. So markets might try to come back and retest this level of demand, and we'll have to see how the markets play out in this area. So for the next week, we are expecting the markets to be trading in this wide range, that is 15,800 to 16,326. Let's move on to the Bank Nifty now. If you look at the Bank Nifty has also hit a level of supply today, but the better level of supply is slightly above the current market price. So let's quickly bring up the chart of Bank Nifty here. So let's start with the monthly chart first. If you look at the monthly chart, we are still holding on to that monthly demand zone, and prices are showing some kind of a strength here. If you look at the weekly chart of Bank Nifty, you will see that prices are holding on to this weekly demand, and in the recent move to the downside, the prices have not even come closer to this demand zone again. So Bank Nifty comparatively is showing some strength more than the Nifty currently. If you look at the daily chart, And if we are able to look at the options gauge here, the options gauge is currently telling us that the premiums are deflated, option premiums are cheap. So if you are a directional trader, you can enter some kind of vertical debit spreads, or if you are a non-directional trader, you can enter some low risk non-directional strategies as well. If you look at the supply zone now on the Bank Nifty, the clear supply zone is seen on a 60-minute chart. So let's go to a 60-minute chart, and the key level of supply is this area here. So currently the market is reacting to this supply zone, and if the market does play out the way it is playing out right now, there is no clear level of demand other than this gap area here, but this is going to be a key level. Although the level has tested once already, we might tend to see another bounce coming out of that level if the prices do come. So the range for Bank Nifty is slightly more wider than the Nifty, but the key level of supply that I'm going to be watching out for next week, in case if the market takes a little bit of help of this demand and starts pushing up, is this level over here. And looking at the way the price is structured at this area, this level might act as a bull trap and might probably suck in all the novice buyers into this area here. So for next week, for supply, we have 35,476 to 35,626, and the level of demand is much lower right now. So the bias based on the concept of demand and supply and location is more towards the short side than the long side. Let's look at the USD/INR. And if you look at the USD/INR is just heading in one direction, and that direction is to the upside. But let's quickly have a look at the charts. This is the monthly chart of USD/INR, and if you look at this monthly chart, we have this monthly demand zone now, which is a fresh and a new demand zone that is created. If we go to the weekly chart, we see there is just a gap below this demand. So there's a new level of demand on the weekly as well, and we'll have to watch out for that level if the prices do come and revisit this area here. So 77.83 to 77.42. And if we look at the daily chart, no, there is no clear level. This is that level which is playing out right now, and you also see some level of demand being playing out right now. So we are right at the top of this 79 handle here, and any kind of a consolidation or any kind of an uptick in the USD/INR further is likely to bring our markets lower, because the USD/INR and the Nifty are inversely correlated. Alright, let's now have a look at the sector for this week, and we are going to analyze the Nifty IT sector. And today TCS had its earnings, so why not bring TCS also on the chart and discuss some key levels on TCS as well. Let's start with the IT sector first. So on the monthly chart, the IT sector has hit a crucial level of monthly level of demand, and we are seeing some kind of strength coming in and a bounce coming in, and probably that is reflecting in most of the IT stocks. If we look at the weekly chart on the IT sector, we are seeing a little bit of a bounce. Now we do have this supply zone here, which might act as a little bit of a barrier. But if the overall results, etc., the euphoria in the market is good, then we shouldn't ideally hold this supply zone, and market should not have a problem in breaking this supply zone and moving up. But yes, as an interim barrier, this can act as a little bit of an obstruction for some of the IT stocks. Let's go to the daily chart. And on the daily chart, we are seeing this key gap level over here. So any gap up into this area here might create a little bit of a sell-off. So this is a key area to watch out for. So if you look at the Nifty IT sector, it has been consolidating over a period of days, right? So generally when any market or any sector tends to consolidate, it tends to give a breakout on the either side, right? So taking into consideration, if USDINR keeps on going up, it's going to probably help the IT sector also to move to the upside. Let's bring on TCS on our charts now, and let's do a top-down approach on TCS. If you look at the TCS monthly chart as compared to the Nifty IT monthly chart, the monthly demand zone of TCS is still a little further away. Right now we are seeing a bounce coming out of this area here, which is pretty congested right now, but this level of demand is a tested level of demand. The lower level is still a fresh level of demand. If you look at the weekly chart of TCS, it is showing some kind of a bounce after price creating a strong move around 2 weeks back, and it is still probably just facing a little bit of a obstruction in this area here. If you look at the daily chart, very similar to the Nifty IT, you can also see that TCS is also consolidating right now, and we do have this gap supply. In fact, on TCS it has already tested once, so if the market tends to show some strength, we might see TCS moving further up. And in case if the earnings or the results are not so good and TCS might just start moving down, then there are some key levels of demand as well. If you look at the options volatility is expensive, obviously, because today the earnings are coming out, and what we expect is that post earnings this volatility will tend to fall down. So all the option premiums which are currently very inflated are about to deflate once the earnings come out, and that is going to help the option seller, and it's more prudent to sell options in this kind of a market when volatility is extremely high. So option premiums are inflated, not very inflated, but showing a level of inflation, and post earnings we expect this red line, which is the volatility line, to drop towards the lower zones here. Let's look at an intraday chart, and on intraday we have a 120-minute chart. So I'm just going to load that 120-minute chart. And currently if you look at the 120 minutes, right at the bottom over here we are seeing two key levels of demand. Now these are levels which are more or less coming from a reaction to a previous level, but we do have these two levels that are in play, and if any kind of negative news brings TCS closer towards these levels, then we can expect to see a bounce coming on to TCS, where you might see the prices doing something like this. And taking off from here on. Alright, so supply is a little far away from the current market price on TCS. In case if TCS gaps up, we can't do anything much. There is supply here, but this supply zone is tested, so we will patiently wait to get the right entry, and the levels of supply are much higher in price. Here we have this gap area supply here, which is going to be a crucial area of supply on TCS, but the level is considerably very far away right now, so we don't need to worry too much about this level. The near levels are this area over here, so this is one level to watch out for on TCS, 34.51 to 34.85, and these are the clear demand zones. So this is the analysis for this week. I hope you enjoyed the analysis. We covered Nifty, Bank Nifty, USDINR, IT sector and TCS for this coming week. If you like this analysis, don't forget to push the like button on our channel, which is Sharekhan Education. And see you all next week with some more analysis and some more trade setups. Have a lovely weekend, everyone. Take care and goodbye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.